Hello, guys. So we have a very big bit of news coming up. As you know, it's the CPI print. It's the week and I guess the day that everyone's been waiting for. So lots to cover off. I feel like I'm a little bit laggy here. Apologies if I am, but
I'll
we
double
have
check that on YouTube for you.
yeah, have a little look-see for me. But anyway, so 2 minutes until we have the CPI print. We're going to have a look at the data, and we're also going to have a look at how that has an effect on the crypto market. As you know, we're here as all of the time. Anyway, AJ, just quickly, how are you? And also, just quick, give everybody a warm welcome when you come and join us.
You're not lagging, which is good, and yeah, I'm doing well, thank you. Welcome back, everyone who was watching my stream earlier as well. We went through sort of bearish scenario of what could happen if Bitcoin did react bearishly to this CPI print, and now we are going to find out what happens. For the whole crypto market and the traditional market as well. Just to make you aware of this chart as well, I showed you it previously. This just shows us what has happened when we have had the previous CPI prints, and basically what it shows us is lots of volatility is going to come. So I am expecting volatility after today. We haven't seen much volatility at all for the past week. So I do think there's going to be a lot of volatility. Whether that is towards the upside or the downside, we are unsure as of right now. We need to see how the market reacts to that. But that's what we're here today to show you.
There we go. So I'm just going to bring up Bloomberg if it loads. So we should. I said this is alive. Just want to double check. So what everyone's talking about today, obviously, is this little CPI print. You can see here lowers inflation from China, which was good. On point for Germany. I mean, the Germans are kind of always on point, really, aren't they? But we're just going to see what comes out. And so this is from a little bit of a slightly laggy Bloomberg terminal. So the news is coming out now. I'll unmute this. We should have the news. Downloading and uploading at the same time is not easy, guys. But we have.
Is it okay to stream this from Bloomberg?
This, yes.
Yeah, is it free? Okay.
Yes. So the overall expectation here, guys, is that, okay, so here we are. So prices rise. Okay, so this is lower. This is very good. So we have lower inflation as opposed to what was expected 8.7. We've come out in at 8.5. Instant move to the upside. Bring up the NASDAQ chart here. Sorry, the Bitcoin chart.
Bitcoin chart with a nice volume. We are seeing the price have a nice increase in price. So that is actually really good for the chart that I was talking about as well. It looks like we could, break towards the upside of this chart that I was talking about in the previous stream.
Exactly. So this one thing I think is going to be key. This will last. We have an instant jump to the upside. If you had any orders placed in case of this, obviously those will have been triggered. We would want a trailing stop on some of those, as we mentioned in previous streams. So we're seeing this. The key thing that I think we're going to need to be aware of is just looking out. Yes, consumer price index is good, and also the core inflation, which is the key. This has come in lower, and obviously, like I said, this is the one the Fed is going to follow. This actually shows that that the Fed are doing enough. So I don't think that we're going to be in this elevated inflation for a very long time. The rate hikes that we are expecting could be not even not paused, but if we have a look here, I guarantee you that this will have changed. So we might then have a slight change, and we'll check on this tomorrow. But looking at the rate hike that's expected, this is going to be a 75 basis point. This is a 50 basis point. Now that inflation has come in lower than the expectations, it might feed us more into actually we don't need to be so aggressive, and we could then have a really nice pump towards November, December if we ease off in that September meeting for inflation.
Yeah.
Just want to bring that up there. And as you see, the yield is falling. Let's have a quick look. Inverse. Okay, yeah. So let's have a quick look at the dollar strength. If you can bring that up here, that
is actually decreasing as of now. If I look at let's look at a 5-minute time frame. Yeah, so that's actually having a pullback from this news.
Yeah, there you go. So this is going to be very good for risk on assets. Very, bad for the dollar, which
Yeah.
is good because we've spoken about how there's such a strong correlation between the dollar itself and also Bitcoin. Bringing up those two charts side by side. So Charlie
Yeah.
was ready to buy the dip. That is, yeah, it's a shame. And so I know we've said before, it's good to have an order in both directions just in case. So it looks
Yeah.
like that we've kind of bounced off that perfectly. AJ, what are we looking at here in terms of this upwards channel, which really looks quite sexy to me?
It does, yeah. So, in the live earlier that I did for you today, I mentioned the two scenarios. If we did react bearishly, if we did get a bearish figure, then we would most likely break towards the downside. But we have had the bullish scenario play out. It looks like as of right now, and we are bouncing off of this support level. So we can look at this as an ascending triangle now, and we are looking at this resistance up here. This has been major resistance. So what we want now is to break above this major resistance level here. Once we can get above it, then we can start looking at getting into a long position, and then look at that pullback, potential pullback back to the resistance to increase that long position as well. Once we have that confirmed bounce, and then hopefully we could ride that all the way up to the potential price targets, which I have taken off the screen, which I'll just put on quickly again. So the first potential price target is approximately around $27,400. And then the second price target would be approximately, drag that to the potential breakout point, would be around just under $30,000. So that would be a great move for us if we did break towards the upside. Obviously, there is a lot of resistance here, so there's still a possibility we could get rejected. But because we've had reaction from the CPI prints, then there is a possibility we can break above it. We break above it, that's when we want to be getting into the trade, not earlier, because as I said, it's major resistance. So there's still a chance that we could see a rejection. But this is really, really good news, and it sort of invalidates what we were looking at on this pattern on this chart as well. When we do see a increase in the CPI rather than what's forecasted, then we do see a pullback when we do form these bearish flags. You can see it's happened here. We forecasted 8.4, came in 8.5. We saw a pullback out of this bearish flag. It happened again here, 10th of June. We forecasted 8.3. We came in at 8.6, and we had a break towards the downside of this. And because we've had another bearish flag, if we were to come in higher than expected, I would have expected a break side of this bearish flag, but luckily we have come in lower than expected, which is obviously bullish. Hopefully now this can take us, lead us up to above that sort of $25,500 level, where we can then break above that resistance of this bearish flag and hopefully invalidate that bearish flag, and then we can sort of forget about that $10,000, $12,000 target that people have been talking about until another pattern occurs, if it does occur. But yeah, very, very bullish on the chart, on the charts now. Yeah, this morning we were looking bearish, but now because we found support, and because this has had a bullish reaction from the CPI print, then we can talk about the bullish scenario playing out. Hopefully we can get the break towards the upside and get a nice long entry in.
Yeah, and I think we're going to have quite a strong possibility of that happening. Because it's not just what we expected. So obviously, just to reiterate what we're looking at here, this is the core inflation and the CPI inflation. So we knew that CPI, which is Consumer Price Index, this includes energy, it also includes food. We know that those were going to go down because just looking at something as basic as wheat, for example, which accounts for it's just in everything, tons of calories, whatever, consumed worldwide. Looking at the prices, they have been on that really steady decline. So obviously, in that month of July, we were kind of coming back, and it's just been on like a nice fall to the downside. Really, really good in terms of that. Also energy. So if we just look at WTI, for example, Western Texas crude, that obviously has been on a push to the downside. So we know that inflation is going to be coming down, or the CPI I should say. But one aspect is we're actually seeing that rent is which is included in the core, that has gone up very slightly, but the basket of other assets around there has gone down. So it is very, very good. And so I think we're kind of feeling as though longer term we'll be in a very, very good position. Just wanted to kind of, highlight those there. But also I noticed this from your stream earlier. I saw that there was some discussions going on.
Yeah.
And I guess she's
I remember someone
the
saying that they were going to go long. So and then I remember someone saying they were going to go short as well. There was going to be a dump, but yeah, hopefully no one got liquidated. Hopefully they had their stop loss in play.
Yeah, always use protection. I know you told everyone, but that is the real key. So, I mean, look, guys, there's not really too much more to kind of iterate. Longer term, well, short term, obviously, we've got pump. This is fantastic. We've just had from AJ the key levels that we're looking for. Longer term, I don't want to do that. Longer term, actually, let me just refresh this, guys, so you can see this live. 58% on a 75 basis point. Okay, it's going to have to wait until tomorrow. Oh, no, hang on. Current probability. Maybe it's still loading. Okay, no. We'll come back to this tomorrow and we'll see if this changes. But even still, I wouldn't mind a 75 basis point. If we have a 75 basis point, that means that inflation, we're going to start moving away from these crazy high 5.9, the 8.5s, down into those more manageable kind of 5 handles, maybe, even a 7 handle for CPI. So these numbers are exactly where we want to be. And that sets us up very nicely for having that maybe 50 basis point, hike here. Because that's what's been, kind of anticipated. Most likely, obviously, I'll let you know tomorrow the changes. 75 basis point, 25 basis point, and then we end the year on another 25 basis point. And considering we've had 2 75s and we're anticipating another, that is going to leave us in a very, very nice position for this accumulation. The pump, I should say here, after our little bit of accumulation.
Yeah. I would like to have, I don't know about you, I would like to have a little bit of a longer accumulation phase because I do want to.
I want to buy more Bitcoin.
Yeah, I want to buy more Bitcoin, cheap Bitcoin. I've just seen that we have around 57 people watching. So if you can smash that like button, it does really help us. Help us bring you this content as well. If you enjoy it, then please make sure you smash that like button. If I just bring up my screen,
I want to see it. Even if you don't enjoy the content, I don't care. Give me a like. Click it. You have to.
Like anyway.
I'm just joking.
Just to show you, we're still pumping on the Bitcoin chart as well. And just to let you know, we are coming into this major resistance level here. You can see previous resistance here. Lots of resistance, and we've been rejected from it each time. So this is the key level that I'm looking at this moment in time to get above. Once we get above there, we can start looking at those price targets. So hopefully we can break above that level. But that's all I've got for you on the chart side of things.
Yeah, no, I mean, that there's not really much too much more to go through. Obviously watch for the rest of the day. There will be a little bit more volatility expected. We see that the Nasdaq is up by 2.5%, but that's just in the futures market because obviously the market is not open. Like the US market can't trade it. So you're going to do the futures. So that's what's up. And overall volatility is down, just as a little indication to you guys. Volatility is down by 5%, which is a bit crazy actually. And there will be profit taking, guys. Just bear in mind, there's a lot of people who have, anticipated this in the same way that we have, prepared in the same way that we have, and will want to take profit. So now that we're very close to this key area of resistance, be careful. We might see profit taking, and there might be a bounce off that higher level, which is very much expected. So we could see that a little retracement, which is not a bad thing because we have quite a now established a nicer level of support. Maybe on the lower time frames, it might be more obvious to see if you're tracking it throughout the trading day. you know, I'd say go on to that. And yeah, you might be able to kind of see where these, you know, where the volume is, etc., or whatever it might be.
Yeah, definitely. And there will be profit taking, obviously, as Ben said, and hopefully we can get above that resistance, get the profit taking above the resistance, so we get the pullback back down to the previous resistance, which will act as the support, and then that'll give us a good entry point to get in, and then we can hopefully ride that up all the way up to the price targets.
There you go. So yeah, well, you know, good morning to everyone. Hope you enjoyed the stream, and well, I'll kind of stick around for 30 seconds if anybody has any questions you want to kind of throw at us. But overall, the long term for me looks pretty good. Depending on what happens, obviously, in the next CPI print before the Fed come back. But there was worry of an interim meeting. That's not going to happen now. Everyone's pretty good. Confidence is restored in the Fed and the US market. I will say the jobs report is a lagging indicator. It's a lagging indicator, which means that the data from that is kind of relating to what happened a couple of months ago. So that's not something that we see as a prediction of the future, more just kind of what happened in the past. So that will probably still come out quite high, but you know, it's not seen as important as the CPI data. So keep that in mind. You know, we don't need to worry too much. So yeah, that's overall. Just, you know, keep moving your stop loss up. Expect a bit of volatility once people begin to be taking profits. But overall, we're looking very bullish. I'm actually pretty happy for the rest of the week.
Yeah, so am I, and we do, just to remind everyone, we do also have that descending broadening wedge, and you know, this is what can sort of take us. This bullish news is what can take us up to those TPs, which is at 31,000 for the first TP, and then 40,000 for the second TP. You know, it's gonna take some time to get up there, but this is news that is getting us up there.
There you go. All right, guys. Hope you all have a great day. Yeah, be very careful. Always use protection. Number one rule. Got to look after yourself there. Give you a micromanhood. All right. Have a good day. Thank you, and we will see you tomorrow.
See you.